Good afternoon, everyone. It's a pleasure to be here this afternoon. I work for the Swiss Re Institute. We are the internal R&D unit within Swiss Re. And our flagship publication is the Sigma. We have about 6 to 7 every year. Just trying to flip this. Yes. And our most recent Sigma is out there. There are about 100 copies. It's also available online. It's on this topic of digitization and data-driven insurance. So when you have the opportunity, please speak to some of us here or pick up a copy for yourself. Digitization is impacting many industries. We're very familiar with what it's doing in the tech industry, but it's also impacting a number of traditional industries which have historically relied on people interaction. And one of my favorite examples is what it's doing to the health and fitness industry. And this is a picture of a German company called Freeletics, which is actually digitizing a historically people-intensive services business. So you can imagine the fitness industry. You would physically go to a place, work with physical equipment, with a physical instructor who has to keep you motivated. But this company has actually figured out a way to not only digitize the whole experience, but also to personalize it. And you can download the app on your phone. It's available on Android or iOS. Put in a few details. And as you give more data to the system, it actually learns from you and customizes an exercise plan for you. And not only that, it engages with you and keeps you motivated because we know how hard it is to keep going. And for those of you who are fitness enthusiasts out there, this is a new level of engagement which digitization has enabled even a traditional industry to engage with its consumers. And this spreads across a wide variety of industries. There's a phrase which is coming up on the screen. It's called, there's an app for that. This is a phrase which was actually patented by Apple a few years ago, and what it reflects is this reality that if there's a problem which is out there, there's probably someone who's going to design an app to solve for it. You can have an app to decide the number of calories your lunch has at 1:30. If you've parked your car somewhere and you don't know where it is, there's an app for that. You can have an app to predict for an earthquake. You can have an app in case your phone is stolen and someone tries to unlock it 3 times in a row unsuccessfully, takes a selfie and sends it to your email. In fact, if you are facing tech overload because of all these apps, you also have an app for that as well. Yeah? And what that's actually doing is actually a very subtle shift in terms of who is engaging with the customer and what the interface is going to be. The picture on your left, yes, is a picture of the largest messaging apps and how they're becoming dominant in this customer relationship. Yeah? So those are familiar names. And maybe I'll just take one example of WeChat, which is owned by Tencent. It's an Asian player. And what you see these systems doing, these platforms doing, it's no longer just a place for people to engage with each other, with friends, but they're actually becoming marketplaces where people buy and sell goods and services. And what WeChat was doing just last week because of this coronavirus is mapping the publicly available data in terms of reported incidents in a couple of Chinese cities. And if you are a user who wants to travel from one place to another and you want to figure out where the infections are most likely to be and you want to avoid those places, they are making that data available to you and playing a role in actually keeping you safe. Okay? They can't predict where it's going to happen next, but they can actually help you avoid it and actually take some steps to de-risk your life. And that's a role which has traditionally been played, I would think, by the insurance industry. Yeah? The first fire departments were started by the insurance companies, and it's only later that they pooled together and the government took it over. And we see some examples already of the big and small tech companies doing this in traditional financial services. And the anecdote on the right is when Facebook has been having conversations with a number of big banks saying, listen, you give us your data, we will give you our users. we will run services, banking services on our Facebook platform. It could be simple services like someone wanting to check his account balance. Why does he have to log out of Facebook and sign into the Citibank app, for example? Yeah, he can check his balance online here. It could be more complex services like fraud detection or fraud alerts, where Facebook would claim that they have much better data. So here we are seeing a situation where you have the big financial services companies investing heavily in their own apps, their own websites. They want people to stay there, but at the same time, they have really no option but to figure out a way to engage with these platforms which actually have billions of users on them. And it's actually fascinating the amount of data which each one of us has released out there and what can actually be done with it. So our email addresses, our locations, our physical addresses, even our facial recognition data, and I'll talk about why that's important, your chat conversation history. Yeah? And it's fascinating how algorithms and models are so powerful today. They can predict your personality traits better than your close friends and your family can, just by looking at 10 likes. And I saw that demonstrated last week. And if you want to read more about it, it's Professor Michael Kaczynski from Stanford University has a paper on this. So how open-minded are you? How diligent, hardworking are you? Are you an extrovert? Are you an introvert? They can do that just by looking at 10 likes, and they can achieve a level of accuracy which is better than the ones who are closest to you. Yeah? And if that's not enough, what is actually very disconcerting is also to see the fact that if you present two pictures before them of two different individuals, these models are able to predict sexual orientation, yeah, at an 81% accuracy from one photo alone. Yeah? And if you get 5 photographs, that the accuracy goes up to 91%. So it's actually staggering the amount of insight which is available because society is becoming digitized. And that's actually going to increase as we go along. We heard about the number of IoT devices which are going to explode on the scene. And by 2025, the amount of data which is going to be there is actually mind-boggling. IDC forecasts 175 zettabytes of data by 2025. 1 zettabyte is like 1 followed by 21 zeros, and we crossed 1 zettabyte only in 2012. So you can imagine the explosion in this. And a lot of this is also going to be real-time data. And the challenge for us as our industry is how much of this is truly predictive. This is big data, but how much of this is actually usable data? A lot of this is created by people who are not familiar with insurance, by both companies and individuals. And there is a significant amount of work needed to derive risk signals from this, and that's where there is scope for collaboration. And some places some parts of the financial industry are already deriving signals from this data. This is an example from Alibaba. Yeah? So they have got their Sesame credit score. It's a number from 350 to 950. The higher you are, the better. And they get it from like a whole range of data sources which are publicly and privately available. So the folks in the green, with the green boxes, are ones who have higher scores, and you get a lot of benefits from that. So you'll get lower rates of interest on your loans. You get discounts in electricity bills. You don't have to give a deposit if you rent a car. You actually avoid queues in airports, and there are some funny use cases as well where they promote your profile on websites like Shadi.com, so you get better chance of matching partners. Yeah, so there's a lot that traditional financial services is already doing with some of these insights. But as insurers, how do we plug into this? And that's where we heard a lot about digital ecosystems and platforms. And this is a depiction of how that would look like. Yeah? So you have the consumer-facing front end, and then you have the platform which integrates and orchestrates a large number of service providers. They could be hospitals, health clinics, advertisers, payments companies, and then you have insurers who plug in as well. But that will require a very different level of capability. We are also already seeing some early stages. So you log into Amazon, you can buy insurance protection for your phone. Urban Clap Ola, Uber, there are some insurance products, but that's going to increase much more. This is an example of probably Asia's largest digital insurer and how they are playing in that space. Zhong'an, they are participating. The green bars on the top, you can see a number of ecosystems like this. So there's consumer finance, there's auto, there's lifestyle, there's mobility. And they've also got a technology company of their own, yeah, where they have like blockchain and cloud computing services which they make available to other insurers. And they can process up to 32,000 policies a second. So that's the level of capability which they are developing. And it's quite interesting when you talk to them, they have a very different vision of how the world of insurance could look like. But this is, let me close with this example. We heard so much about Lemonade, yeah, today. And this is, I want to allude to a specific case where they settled a claim in 3 seconds some time ago, and they claimed at that time, tongue-in-cheek, I would say, that it was a world record. And what did they actually do behind the scenes to do this? So this was a gentleman who lost his jacket. So they're in Lemonade into like household insurance, personal effects insurance, a small personal lines carrier. So he lost his jacket and he submitted a claim sometime like 7:38 in the evening. And at the back end, nobody was in the office. Everyone had gone home. This is what the system does. Okay. So first it says, okay, I acknowledge your claim. Yeah? Then it actually cross-verified that with the policy. Then it said it ran 18 anti-fraud algorithms. Okay, it said, okay, this is good. Fifthly, it wire transferred the money, and then sixthly, it said, you know, it let the customer know your claim is settled. It took me like 60 seconds to describe what actually happened in 3 seconds. And that is a standard which is being set right now for the insurance industry. And you are seeing a number of incumbents actually trying to match this in some lines of business. So I think Allianz came out saying that they want to settle a majority of their smaller commercial claims within 24 hours. That's the standard we are working towards. And let me finally conclude with what the industry would need to do to be able to play in this space. So there are 5, I would say, capabilities. One is to choose the right partners. We are in a long tail business, and different partners have different staying power. The second is to get the actual data. Yeah, that is key. Yeah, unique data sets which you can work with. Then there's customer insights, the actual behavioral understanding of the customer. I think an insurer has, on average, even the most developed markets, 2.7 information interactions every year with customers. That's not going to be enough. Fourthly, the technology itself. Yeah? And finally, and I think most critical, is the ability to draw predictive insights from this. Yeah? We have the loss runs, we have the claims data, we have the modeling expertise to be able to figure out if someone leaves his garage door open once a week versus 3 times a week, what does it actually mean for pricing? And those are the tough parts. But I think underpinning all of this are the softer factors, the mindset and the culture and the capabilities. And the more insurers you speak to globally, you realize bringing this operationally into the systems is the toughest part. Getting people to change behavior is the toughest part. So I'm going to close there. If you have any questions, you know how to reach us. We're here. Please take a look at the Sigma as well. They say you should always leave your audience before your audience leaves you. So I'll close there. Thank you so much. Yes.
So I was really wondering if this is an insurance seminar. I was quite confused hearing my fellow panelists talk about technology, digital data, a whole lot of stories of China, blockchain, etc. And I had to look around for a few of my other colleagues in the audience to really make me believe that I'm in the right conference. Because I think people on this illustrious panel are forgetting a very, very critical stakeholder in this business, and that is the regulator. All these fancy ideas that they talked about, all of these amazing things that they talked about, that this is possible and that is possible, and you know, today at the press of a button, claim can get paid, and a jacket can be insured, car, if it is moving slower, will get a better premium. All of these are awesome thoughts, and I'm sure many of us in this room and outside will have even better thoughts about what we can do. But I'm the only one representing an insurer here. And I know that this is not a technology seminar, this is not a data science seminar, this is an insurance seminar, and therefore the biggest stakeholder for us is the regulator. And all of these ideas traditionally crash down when you start engaging with the regulator and talk to them that you think I had a brilliant idea, I want to do this, and the regulator says, you can't, this is not in the consumer interest. You go with another idea and they say, no, it can't happen. We have regulations which have been written in some era, and you just need to comply to that. So my job is much, much simpler. It is just to tell these gentlemen that none of what they're thinking is possible, and they can keep quoting examples, but it ain't happening. Not really true. I think that's the interesting part of my 10 minutes that I intend to spend with you is the concept of sandbox and how that is going to certainly change the way the industry is operating. That is certainly going to change the way consumers get serviced by insurance in the times to come. I had requested my team to come up with something which is unique about sandbox, and the first thing they came and told me is, where did the idea of sandbox come from? Why is the name sandbox? Apparently in computers, when you're trying to install a new software and work on something which you don't want to kind of corrupt the rest of the computer or kind of do something to your data and programs that are there. So there is a tool which is called Sandbox, in which you could do some experiments. You could do the new installation and see how it is working without impacting the rest of your business. And that in the computer software language is called Sandbox. And I think we've derived that very, very beautifully here to say there is insurance which is a traditional business. When I joined this business, it used to be called Sunrise Business in India. Very soon I realized it's a 150, 200-year-old traditional business and hasn't changed much in the 10, 15 years that I have been here. And we always thought, how will it change? Because it's a very simple philosophy. One gentleman alluded to it, that all of us in this room, we all pay some small premiums. Some of us have a casualty, and the collective premiums pay for that, those people. It's a simple concept of pooling risks and paying out. But I think a lot of these ideas that we talked about are in the interests of consumers, are in the interests of innovation, and they need a platform for it to get experimented exactly the way you would want to install a software in a computer and experiment with that, not making sure the rest of the entire business gets corrupted. So the regulator came up with the concept of sandbox, and I think the whole agenda is to say that while these ideas are great, but many ideas in the past have been non-consumer oriented or non-stakeholder oriented, and the regulator has a huge responsibility towards the consumers to not allow fancy ideas which could potentially be damaging to go and impact the business and the trust deficit already that my colleague talked about to get even further eroded. And therefore, regulators across the globe, with a very strong willingness to continue to protect the consumer interest, but yet allow innovation to happen, created this whole concept of sandbox that we now talk about, hear about, and have as a platform for many of these ideas to get deployed. Is the whole idea really, really new across the world? No. In 2015 in UK, this whole concept of financial services regulators coming around with sandbox got created, and that was the first experiment where regulator allowed this to happen. Since then, across the globe, about 10 countries have adopted to sandbox, and another 10 are really pacing forward to be able to make a movement around this. So it is adoption that is happening across the globe. It is not just an Indian phenomena. And even in India, if you look at it, in 2018, Feb is the first time that a committee around this got set up, and this committee was to ensure that experiments can be done in a very controlled and regulated fashion. The IRDA themselves set up a committee a little later than 2018 Feb. This was in September. And what is the most amazing news is By the time they announced and by the time they went ahead and closed the first set of applications, this has been done in a real record time. So they announced invitations for ideas across the board. It was around products, it was around services, which could have been in claims, which could have been in operations, it was in distribution and across the board. Over 173 ideas got, were sent out by the industry, and about 33 approved in a real record time frame. And I think at this juncture, we should give a big round of applause to our regulator. I can tell you this is more progressive than many countries, and this is more progressive than some of the other regulators that we have in the industry as well. And I didn't hear that thunderous applause, so I would request you to go one more time to really applaud. Because this, I am telling you, is going to change the way insurance operates in the future. I see many young students who are going to be future leaders. When I joined, I said it was a sunrise industry, and when you join the industry, it won't be sunrise, it will be the industry that these gentlemen were talking about, where ideas and products can be done in a day, products will be delivered in a couple of hours, etc. Over 16 products in health, over multiple products in the distribution side and in the non-life side got filed and approved. And these range across board in terms of the themes. If I have to talk to you about, they are short-term insurance products that some of us talked about. And we call it sachetizing. How is insurance going to become sachet products? So life contracts are for 15 years, health contract for 1 year, motor contract for 1 year. How can we move that in a theme to very small packets which consumers can experience? My colleague talked about pay as you go. If you were to travel to another country and you wanted insurance, you could just get insurance for 5 days because you were traveling in that country. You could get for 5 days and you could come back. This can get further embellished by data, which is what my other colleague from Swiss Re talked about, is if your driving behavior in India is known, the insurance premium in other country can also be determined using that. So concepts like these are the ones which are emerging very strong, not only on the motor side, but even on the health side. There are other concepts which are emerging, which are around even things that we have seen. For example, we've always had health insurance, which was firstly for the individual. And if you had 4 people in your family, you needed 4 different policies. And then somebody innovated a concept of floater. And the question today is, why can't motor today have floater? People have got 2-3 cars. Why can't they have one policy which covers 2-3 cars? So it's extension of ideas from certain products to the other products which are starting to move. And I think we are at the first level, and we are at the first platform of this idea creation, where we are using simpler but clearer concepts which can get communicated to customers for them to use. I go back to FMCG days, where shampoo usage was not very big in the country, and therefore companies like Unilever and P&G came up with sachets of shampoos which people started using, and then it started to slowly move to bottles, and today many of those people buy these big 2-liter value packs from stores. So similarly, if you have health insurance which you buy for a week, or just around the time when you think the sickness phase is higher, you could experience it and then maybe go for longer term contracts in the future. So lots and lots of those ideas are there and are possible. I'm not getting into the ideas and themes. A lot of my fellow panelists have discussed that, but a few things that the sandbox is solving. Sandbox is clearly creating a space for innovation. I think there was innovation in the industry in the past. I would not say that innovation wasn't there, but I think today, with the combination of ideas, of technology platforms, of data, I think the way products can get structured is very different. You won't believe, for example, FASTag got launched very recently, where when you cross a toll, it auto detects on FASTag. There are 3 stolen vehicles which crossed the FASTag randomly in some part of the country, and because data got linked, it could immediately be established that this stolen vehicle is moving in this direction, and cops could catch it. So can you imagine, it was not even the reason why FASTag got set up, but today fraud can get detected using technology and data in a very different way, which creates opportunities to develop new products. So space for innovation is going to change very dramatically. The second is better access to finance. if I, as an insurer, were to kind of invest in these crazy ideas, I don't think my reward return ratio in my mind is fully solved. And therefore, as you rightly see, we have people from the IoT industry on the panel who are investing in the IoT business, people from the reinsurance business who are saying these ideas are great and we want to collaborate because this is what the future is. The actuarial science stroke blockchain technologists are here who are then saying that we can help you structure the pricing and concepts of this because of global engagements that we have. And we also have consultants both on the panel and the room who will help us build this and structure this all together. So there is co-investment that is coming, and you don't need to necessarily create the idea on your own today to kind of deal with it. I think a big clarity that the regulator is giving us also is that you can go ahead and invest in technology. So we have tech stacks around the industry, but insurance tech stack investment gets more clearer and committed because the regulator is allowing us to experiment with these ideas, and companies which are going to be more agile and they're going to be more responsive to consumer and these needs are going to be the ones that are going to win this battle. And therefore, it gives insurers clarity to invest in technology. Of course, the sandbox allows you to market in a tested environment, therefore you're faster to market, and there are limited failure impacts. So the way it is architected is that you do only so many policies or only so much premium, come back to the regulator at the end of it, share your learnings, and then the product gets commercialized. So even if there's a failure, it's a limited failure. It's not something that we launched pan-India and then we failed and we lost everything. To the consumers, and that's the last and the most important part, what does this mean? I think I talked about short-term nature, experimental nature of products, and a lot of what we heard Zhong'an do in China and many others do across the world are examples of that. But I think most important are two things. Consumers are today getting products and services that are suited to them. And I love giving this example because there are two things. One, it does lower premium, but for some others it could increase premium. So let's assume for a moment that this entire hall is everybody has a car and everybody is driving across the city. Not all of us necessarily are good drivers, and many of us are hopefully good drivers. Many of us, like my gentleman said, drive shorter distances, many of them drive longer distances, etc., etc. But if we had the same car and the same model in the same city, we would have all been paying the same premium, correct? So what will personalization do? Things like telematics do. It will start segmenting this audience into good drivers who will get better premiums and not so good drivers who will start getting higher premiums. And let's assume that 30% of this audience starts getting now a very large premium. What are they going to do? If the average premium they were paying was 10,000 rupees and all the good guys got the benefit because they're now paying 5,000, 6,000 rupees, what is the 20% of the audience which are not so great drivers going to get as premiums? They're going to get 50, 60,000 rupees of premium. Are they going to continue to drive in that behavior? The answer is no. They're going to, because it's becoming unaffordable for them, they will start changing their driving behaviors. So some of this is not just customization to a customer where you are saying you are a good customer, you get lower premiums. You are a healthy customer, you get lower premiums. Your father had or your mother had an ailment, but you are working very, very hard to ensure that you are fit, and therefore you're not getting the premiums that are loaded because of the impact of diabetes if it is in the clan. Some of these things can be priced better for people who are getting rewarded for the right behavior, but the fact that the not so good behavior will get impacted on a very high side will also make them work hard to start coming into the cohorts, which will overall ensure that the risk itself reduces. The other couple of things are, of course, it increases touch points significantly. Today, the gentleman said that the only time customers are being interacted with is while collecting the claim, the premium, and the only other time is paying the claim. I think the touch points, because of some of these experiments, are going to increase substantially, where you're going to know far more about the customer than ever before to be able to service them. And I think it's the way to look at it is, if 100 years back there was one standard premium for everybody in this room, today it's slightly different. there'll be a time that everybody in this room actually has a premium which is just descriptive of their risk, and Sandbox is a great platform for some of these ideas to get tested. It is a great platform for these ideas to get commercialized and be successful, keeping away those ideas which are not as beneficial to the customer. So this is the regulator's way to allow us to experiment, innovate, and service our customers better. Thank you so much. We'll be happy to answer questions at the end of it. Thank you.
I'm just conscious that we've kind of taken up the allotted time. I think just before we go to questions, really like to thank the panelists. I think Sumit, you really helped demystify blockchain. Even for someone from the consulting business, the way you simply articulated the use cases, the possibilities, and why certain things on a blockchain platform is more efficient, more practical. I think it was really good. Kamal, again, the same on telematics. Again, everyone knows that in India, you don't insure the driver, you insure the car, but that's not a reason not to deploy technology, because you could move in that direction. You could also, as you said, look at pay as you drive, the pay as per the distance you drive, and so many other options that it throws up. And I think telematics is just symptomatic of one technology. You could have the same for devices, wearable devices, drones, etc. So it just shows what a technology can do, in the sector. Looking at how consumers and society is evolving with the data and the interactions are changing. Who has the power? The power is now moving from insurers, banks, to some of the platforms where people go and engage. And I think that shift in power is very important. And if the industry players don't respond, they could actually lose the hold they have on the customers. So it's actually a burning platform for industries in terms of how they are able to leverage the data of their customers, and you can't do it by yourself. You have to be a participant in an ecosystem to be able to really harness the power of data. So I think that was very illustrative. And Sanjeev, again, thank you for explaining the power of what the Sandbox really does for us, because again, it's a buzzword out there. You've got a few products approved, but really it's a huge step forward. I think when I look back, sometimes it used to take regulators 6 months to approve a product, the companies 3 months to configure their technology and launch a product, and you'd be talking 9 months to a year if you were lucky to get a product out in the market. Now clearly that's not really what the digital age will tolerate. So I think there is a role that the regulator is playing in sort of facilitating this through the Sandbox. So really helpful. Like I said, I know we are kind of out of time. I don't know, I'm just looking at the organizers. Do you really want to take questions now? You want to hold it off till let people interact over lunch, or how do you want to do this?
Maybe if we have 1 or 2 questions, we can take those now.
Sure. So let's keep it to 2 questions. Please raise your hands and yeah, go ahead.
Hello. I'm Siddharth from Marsh and McLennan Company. It was a great session so far. We started with survival of the fittest, and that requires transformation to happen, and therefore innovation, the panelists here, and a regulation needed as well, and therefore an ecosystem. What's important, as our moderator Sandeep also just mentioned, is that tolerance. We are living in a world where the new generation is more kind of instant gratification. So this entire transformation requires the speed, the pace. What is it that is needed from 3 key stakeholders, that is customers, regulators, and the industry experts, one each probably from all of them, to keep the pace towards kind of this change?
I think I would say the consumers are very hungry for products and services of this nature, because it really reflects on the real risk profile that they have. So I don't think I think the consumers are very, very hungry. It is for the ecosystem, the insurers and the regulator to be able to service these needs in the best way possible at the quickest pace. So to me, if you are asking me, 3 stakeholders, 1 consumer, clearly very, very hungry for these products and services. And if we are not going to do it in India, somebody else is doing it anywhere across the world, and therefore there's this whole arbitrage feeling. The regulator has taken the first and a very big step, and I mentioned to you that it's a very critical one, and the way they've turned around is actually quite benchmark. And therefore, I think they have given us the first, kind of green signal to move ahead. It is therefore for the industry and the ecosystem to now quite quickly move ahead and demonstrate the capabilities of whatever that we are talking about. And with the success of the first set of ideas, as I mentioned, the opportunity to ideate and create new offerings is huge. It is just that staging that would need time to be able to build that up. Has the industry been gearing up for this over the years? The answer is no, in various degrees of motivation that organizations have had. But the time frame to deliver this is really here and now, and therefore, in the first phase, once we do success, I think there'll be a lot more motivation to go behind this in a very, very big way. So I think customer very hungry, regulator already given a green signal. It's a lot for the industry to demonstrate right now and prove that many of these ideas work, and the target segment are absorbing it in the way that we would want to.
I think the most important thing is that if we talk a lot about customer centricity, if you don't do this, the shift from insurance being a push product to insurance becoming a pull product will not happen. So it's only when you personalize, customize, sachetize, deliver these seamless, frictionless experiences, whether it's while buying, while settling claims. If you don't engage, you will always remain a push product where the customers are not going to be coming in and buying insurance. You're still going to have to kind of almost push it down either by legislation or through the sales channels. So this inflection from push to pull, for this to happen, this is absolutely critical, that the industry responds and becomes agile and personalizes products. Last one.
Good morning, everybody. My name is Gautam Prasad. I am Managing Director of a company called Autotech Solutions. We have heard so much about the Sandbox project. So 3 of the applications in the Sandbox project, 3 of the 33 are from my company. So I'm very happy to see all the promotions around, and I'm very happy to be, I'm really looking forward. It's an exciting time for us because as we heard about certain technologies that is in an incubation stage and will take time, the technologies that we have produced has been actually tested in other countries because we are in multiple countries around the world. And I think my approach now to insurance company will be, they will approach me with more open arms than in the past. So I see exciting digital future ahead. There are some of you here that I still need to meet. Many insurance companies I have already met, and we are planning the projects that we want to experiment with. The only one interesting thing I would like to share is that we heard about the 3-second settlement, right? So with our artificial intelligence product, so we started playing around and see how well we can do it. And with our product being standalone, we were able to settle a motor claim in 8 minutes. That is without the integration of systems to insurance companies. So an insurance partner that works with me, we in motor claims, we are motor guys, we are not health guys and jacket guys. But in motor, the possibility versus what's happening today is huge. And I just wanted to thank IRDA, thank NIA for inviting us here also, and I really look forward to really building that digital future or be part of that journey with the insurance industry in India. Thank you.
Thank you very much. I think on that note, we can.
Thank you so much, sir, for the lovely interaction and valuable discussion. We now request Mr. Shiv Prabhat, Chair Professor Financial Inclusion at NIA, to kindly present the dignitaries on the dais with a memento. Thank you, sir.